topics for today. 1. How HYBE fired Min Hee-jin. 2. Will she sue HYBE and on what grounds? 3. How Sim Entertainment hid Taeil's sex crime accusations. 4. Is HYBE borrowing money from loan sharks? 5th, are they filing bankruptcy? And the battle continues. You may have heard by now that HYBE replaced Min Hee-jin as a CEO but kept her as a producer for New Jeans. But let's backtrack a little bit so that we can understand it better. After an audit, HYBE was going to fire Min Hee-jin. Now, Min Hee-jin filed for an injunction and the court sided with Min Hee-jin, preventing HYBE from exercising its voting rights to fire Min Hee-jin. However, this injunction only applied to Min Hee-jin herself and not to the board of directors. The previous set of board of directors were actually all appointed by Min Hee-jin. So HYBE replaced the board of directors with their own. These positions were then filled by HYBE's CHRO or Chief of Human Resources Officer, CSO or Chief Strategy Officer. This is the same guy that's currently the CEO of HYBE, and CFO or Chief Financial Officer Yi Kyung-jun. This doesn't mean that they can fire her automatically just because they have control of the board, because there is a shareholder agreement between HYBE and Min Hee-jin. Now, the shareholder agreement between HYBE and Min Hee-jin include two things, many things, but these are two of the most important things that actually affect the case. The obligation of HYBE to use its voting rights to ensure Min Hee-jin stays in her position as CEO for 5 years, and a put option. Min Hee-jin owns 18% of Adore, and the put option allows Min Hee-jin to require HYBE to buy back up to 75% of her share at a pre-agreed price. Let's just say the pre-agreed price is $200 per share. But by that time, for example, HYBE stock is $300. Then HYBE gains because they're only going to buy back for $200. However, it could also go the other way. HYBE stock could be worth $100. But because the pre-agreed price is $200, then HYBE has no choice but to buy it back for that price. Then HYBE loses. Now, her share is valued at 100 billion won. This amount was actually the same amount that Min Hee-jin referenced during one of her press conferences when she said, "I can earn up to 100 billion won just by sitting still." In July, HYBE notified Min Hee-jin of the contract's termination and filed a lawsuit to confirm the termination in court. After that, the company's board convened and decided to replace Min Hee-jin. The board appointed Kim Joo-young, the inside director, and the chief human resource officer. She is now the CEO of Adore. So how did Min Hee-jin respond? The legal representative of Min Hee-jin, Sejong Law Firm, is claiming several things. Number one, that the shareholders' agreement is still in place, and Min Hee-jin did not acknowledge the dismissal of the agreement. So that's crucial. Number two, that means firing Min Hee-jin was against the shareholders' agreement. Third, Min Hee-jin has not agreed to continue as the producer of New Jeans. Fourth, it violates the court's decision on Min Hee-jin's injunction. And last, the meeting was rushed and the agenda was changed last minute. Adore, now being led by Kim Joo-young, responded to the claims and said that the board meeting was conducted legally and in accordance with the procedure stipulated in the Commercial Act and the Articles of Incorporation, from the notification of agenda items to the voting process. The meeting was held on a date that former CEO Min Hee-jin had requested to be postponed to, with Min Hee-jin attending via a video conference. The board of directors held sufficient discussion and made the best choice for the future of Adore and New Jeans. Min Hee-jin will most likely sue. Now for the next issue. Is HYBE in financial trouble? Someone on X forwarded a tweet that came from a fan of New Jeans. It contains HYBE's debts. They're claiming that HYBE is borrowing money from loan sharks using the labels as collateral because banks aren't approving them anymore. If HYBE goes under, then the labels and the artist contracts will be owned by loan sharks. This is by far one of the funniest tweets I've ever seen. The documents actually stated that they took out loans from non-banking financial institution or NBFI. These are different from loan sharks. Loan sharks are illegal. HYBE could lose their license if they do business with those people. And I don't think they're actually going to publish something like that, but NBFI are legal entities. They could be pension funds, hedge funds, insurance, and others. Many of these NBFIs offer competitive interest rates, they have extended loan terms, they have flexible terms, and they actually provide fast funding time. There could be also a relationship between the owners or stakeholders of NBFIs and the company borrowing the money. That's why some of these companies actually go to NBFIs rather than going to the bank. Next, the document states that HYBE has 378 million debt and is on the brink of bankruptcy. First, all companies have debts. All billionaires and multimillionaires have debts. They actually don't have cash. They just have debts now. I can discuss that further and explain why they have a lot of debts and not a lot of cash, but that could be another time. Just let me know if you want to understand that. As for debts, when people hear the term debt, they often associate it with negative concepts such as credit card bills, high interest rates, and even bankruptcy. It's true that taking on too much debt can make you less flexible and it could actually expose you to risks if revenues fall or interest rates rise in the context of running a business. However, it's not necessarily a bad thing, especially if a business is huge. In fact, analysts and investors and economists expect companies to use debt strategically to finance their operations. Exactly what level of debt is suitable for your business really depends on the requirements and the nature of your business. Usually, businesses that are involved in fast cash flow or fast moving consumer goods or big companies, these people have a lot of debts. So the question is, how do we know if HYBE's debt is still healthy? There are different ways of computing it. It could be debt to income ratio or debt to equity ratio. This is going deep into the business world. And again, I can explain it if you want, just let me know, but I don't think it's very material to our topic, so let's just move on. I'll just explain it briefly. Debt to income is the ratio of the money you owe versus the money that comes in the business. Debt to equity is the total amount of money you owe versus the level of capital or equity that's available in your company. Equity is the amount shareholders would receive if the company's total assets were liquidated and all of its debts repaid. As of April 2024, HYBE Corporation had total assets of around 5.3 trillion South Korean won or 3.93 billion. Their debt is 378 million. They're fine. For income, they earn 2.18 trillion won or 1.67 billion. Again, versus 378 million in debt. They're doing okay. Bankruptcy is not even in the discussion. HYBE buying back their stocks. Now, they plan to purchase 150,000 shares from the stock market within the month, starting from 27th of this month to the 27th of next month. People are asking why. Well, they say that they're buying it back to help stabilize the stock price, which could be true. That is 150,000 shares they're buying back. So that's going to increase the demand of the stock, which means the price will also increase. But they also said that they want to use these shares to reward their employees and executives by giving them RSUs, or restricted stock units. These are shares that employees can receive but can't sell immediately. They have to wait for a certain period. Starting in the second half of 2024, HYBE plans to give these RSUs to some of their employees and executives. Essentially, it's a reward. The longer that you stay in the company, then the more money you can receive once you exit. Also, the higher the stock price, the better it is going to be for you when you sell your shares. It gives you an incentive to stay and an incentive to actually do your best to help the company go up. Both parties, the company and the employee, get rewarded in this kind of a program. They said that they might also change existing contracts that give employees the option to buy stock at a set price, turning those into RSUs. I also think that they learned from what happened with Min Hee-jin. Min Hee-jin was essentially handed everything that she asked for, the stock price, being a CEO, her own agency. Really, what works is for people to work for what they will have. When they work for it, then they actually learn and make an effort to keep it and nurture it. I got a lot of emails and DMs for new topics. Thank you to everybody who's suggesting topics, asking questions, and sometimes those questions are actually giving me new ideas on what topics to cover. Let me know if there's anything that you want me to cover on X. Follow me on X, formerly Twitter, and or any other social media links that you see on your screen right now. I really appreciate all of your communications. Thank you so much. I read them. If I haven't replied to them, I will. Just give me some time. All right. I hope you found this video helpful. Thank you so much. If you did, please give it a thumbs up, subscribe to the channel, and hit that notification button so that you know when there's a new video getting published, and share the video if you can. That's really helping my channel. Thank you. I appreciate you all.